Let's do the next guest. As this guy to my right just said, shares of GE are they're up. You've seen that this morning. You can see right there, about 3%. The company did beat earnings expectations, the analysts who follow it. It also posted positive free cash flow for its second quarter. And joining us now, first on CNBC, is Larry Culp. He is chairman and CEO of GE. And Larry, always good to have you. Feels like it's been a little while. You know, I wanted to go to the big picture for a second, if I can, because there's a quote from you, and I know this is what you want people to focus on. GE is transforming to a more focused, simpler, and stronger high-tech industrial company. That's what investors certainly want. What can you point to in this quarter that says you're accomplishing that task?
David, Jim, good to be back with you. David, there's a lot in the second quarter results that the GE team posted today that I think speak to the transformation. Orders up 30% year on year. Services, which represent half of our revenue, were up 50% versus a year ago. Revenue's up 7%. Our operating margins expanded 1,000 basis points organically. And as you noted, we had positive free cash flow, which was something we weren't necessarily expecting just a few months ago. We look at that on balance. I think the underlying improvements in the business, and I would argue we've got improvements in every one of our businesses, really help drive that performance. And in turn, as we think about the rest of the year, you also see us this morning taking up our free cash flow guide to $3.5 to $5 billion in terms of free cash potential this year. So there's a lot that we're proud of. I think the GE team had a good second quarter, a good first half, but a lot more to do with these businesses, no question.
Yeah, well, aviation certainly is one where people had been concerned for obvious reasons. You say, on the call, you said this as well, that you're confident in your path to recovery in aviation. What gives you that confidence, Larry?
David, what we look at every morning are departures around the world by region, by engine platform. And what we've seen for several months here is the U.S. Recovering. You heard from all of our airline CEO customers just last week relative to those trends. We see Europe slowly, gradually coming back here of late as well. China is just off single digits from where they were in 2019. So the key markets for us around the world are improving. We see that knock-on effect in our shop visit activity, which is really the core work that we do in our aviation services business. We saw shop visits improve sequentially in the second quarter compared to the first, and we think we'll see continued sequential improvement into the back half. Clearly, lots of things that we all have our eyes on, including the Delta variant. But that said, it looks like the leisure traveler is back, and business travelers are not that far behind, hopefully. I think on balance, that's what gives us the optimism and the confidence about our aviation business.
Oh, Larry, it's Jim. When you talk about the business traveler coming back, I'm not getting that. Is that, and I thought the quarter was good. I just want to follow up on what you said. I see that the regular traveler is really on fire, though, and 2019 numbers are being beat. And what that seems to generate for you is a lot of cash. Can you talk about cash?
Well, we talk a lot about cash today at GE, rest assured. Clearly, the aviation business that generated more than $4 billion of free cash in 2019 is a key part of our cash story. That's largely in our services business. And as we see those departures accelerate, in turn, our shop visits improve, that gives us an opportunity to increase our cash billings to our customers. It's really that pay by the drink, that power by the hour model. Obviously, it hurt us last year when the planes were not in the air. But as the planes fly, that's good for us. But it's not the only way in which we are driving cash in aviation and, frankly, across the company. We talked a good bit on the call this morning about the lean-driven working capital improvements we see. We're trying to be more efficient, more disciplined with our capital expenditures as well. So there are a lot of small things whose cumulative effect, Jim, really helps us drive the cash performance you see in the second quarter, the increase in the guide for the back half, and more importantly, that high single-digit free cash margin we talk about being our ambition over the next several years.
Shepard Smith here. Thanks for watching CNBC on YouTube.